The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien coming to you live from TFNN 9:06 a.m. this morning. We got about 24 minutes to go until the start of trading, and we got markets in positive territory to kick things off. Yesterday, you can call it a historic day, folks, and it's continuing today. The NASDAQ 100, my goodness, I was plugging numbers into the calculator this morning. You're talking about a move, folks, in about 24 hours. We're taking a low of 13,025. We almost got a 12,000 handle yesterday. We were 25 points away, and we're trading with a 14,000 handle this morning within the span of about 24 hours. Folks, you're talking about from 13,025. We reached a high this morning just after 8:30 of 14,107. That's 1,082 NASDAQ 100 points, and that represents an 8.31% pop. 8.31%. 8.307 to be exact. We're going to round it up to 8.31%. Folks, you do not get markets as big as the NASDAQ 100 popping 8.3% in the span of one day. We'll see where the day goes today, but looks like possible geopolitical tensions easing. I don't even want to say it, but those are the reports out there saying Putin has agreed to possible talks, whether he would send his defense minister or secretary or what it may be. But man, quite a 24 hours when you look at the just humanity level of what's going on in Ukraine right now. And markets, though, growth stocks especially, we're going to jump into some of the equities. We got some companies with earnings out there today. We got some equities moving. But yesterday, you saw some of those companies. My dad was talking about it on his program last night, and I was bringing it up. Even yesterday, early in the day, there were some stocks already that were indicating that they were potentially catching a bid. Well, some of that having to do with the fact that as we have war going on in Ukraine with Russia, that possibly putting a little bit of brakes on the economy worldwide. The Fed looking at that, the odds of a 50 basis point hike diminishing. Probably not the best time to come in with 50 basis points as we have potential war breaking out in Europe. Not potential, we have war. So it's tough to recalibrate the language of what's going on. Some of the visuals over there, words can't surmise some of the visuals going on over there, unfortunately. Markets, though, this morning, we are in positive territory. S&P is up 16 points, right at 4,300. You're talking about an S&P that just traded up 200 points. All right, 200 off the 4,100. I mean, simple math. You're talking about 5%. But you see the movement in the NASDAQ 100, right? NASDAQ 100, you had about 8.3%. Let's jump around to some of the culprits. How about Microsoft yesterday? Trading up $30 off of the lows, basically. We closed the action yesterday. We peak out, $25 at $295. You trade up $25, and you were trading at 9.26%. Microsoft's acceleration from where it was. 9.26% for a company that's valued at, what are we pushing? $2.2 trillion. And that company yesterday was worth 9% less than it is today. Staggering numbers, folks. Almost a little bit intimidating if the market is this unsure of valuations. Apple shares trade from 152 to 164. That's a $12 rise. Apple's got 16-point-something billion shares. Apple alone just gained about $180 billion in market cap just from where it was yesterday alone. The amount of money being created and destroyed right now in this market is pretty remarkable. All right, let's jump around to some of the headlines. We get some economic data. We get consumer spending. It tops the forecasts, even as inflation jumps. The way that the headline reads on Bloomberg, the Fed's preferred price gauge, largest annual gain since 1982. Now, we talk to our man Kevin Hincks often. He summarizes it well. saying, listen, a lot of this is already known, right? We know 11 out of the 12 months that are coming due on a yearly basis, and we know that the 11 months are already putting these numbers basically at record highs. Good spending far outpaces services amid the Omicron wave. Headline number, purchases of goods and services increased 1.5% from December, the most in 10 months. It's not what you want to see. And where's the headline number? PCE, 0.6% from a month earlier and 6.1% from 2021. So there's the number, 6.1%. Were they looking for 5.2? Is that where I saw 5.2 somewhere? Let's see this age. See the Fed. Yeah, I have 5.2 here on the CNBC article. That's core. Okay, there we go. So the core number comes in at 5.2, including food and energy. There we go. We got there. 6.1. I thought I had seen 5.2. Market was looking for 5.1 on the core number, so it comes in hotter, highest level since 1983. Nonetheless, core personal consumption expenditures above what they were looking for. Same report showed consumer spending accelerated faster than expected, rising 2.1% on the month. Market's looking for 1.6%. Imagine the market is pricing in. You don't have to imagine. This is what's going on. But it's tough to calibrate your brain with the type of rises we're seeing. Market is looking for a 1.6% rise in spending on a month, and it comes in at 2.1. Personal income was flat for the month. They were thinking it was going to drop. So that number out this morning, and boy, it's going to be interesting. We jump to notes and bonds right now. The 10-year, you talk about some turnarounds, man. How about like 1.5 points from yesterday in the 10-year right now? Yields, dramatic accelerations up and down. We give it all back. I mean, look at that. From Wednesday, you trade from 126.05 up to 127.11. You get a 125 handle on the 10-year early this morning. Right now, you're trading at 126.05. We're looking at a yield right now. We're almost right back to 2%, folks. 1.983%. The yield on the 10-year this morning. All right, let's jump around to what else we got going on. All right, let's see. There's a couple of headlines I want to get to. We do have some companies with earnings out there. We're going to get to them in a moment. But man, let's talk about who is holding Russian debt. Who is holding Russian debt yesterday? I was talking to some friends this morning. And I mean, you just have complete wipeouts going on. 45% of the bonds market value this week. 45%. But folks, if you're holding Russian debt yesterday, what are you doing holding Russian debt yesterday? Okay? I mean, shame on them. BlackRock, what are they doing? $15 billion route in that market, and look at who the holders are. BlackRock, crushing everybody else. Capital Group, they're the top holders of Russian dollar debt, but BlackRock comes in at $1.5 billion. And yeah, there's your drop-off from about $40 billion worth of sovereign dollar bonds, and that number down at under 20 in that drop-off. Pretty dramatic. Stocks and the ruble also fell. I mean, some of the charts talking about the stock index index over in Russia. Yeah, pretty dramatic. The other story out here talking about the fundamental effects of what's going on with the war. $300 billion is how much Russia cash pile is basically overseas right now. Russia still has about $300 billion in foreign currency held offshore. We're going to talk about this a little bit afterwards because it's interesting. Enough to disrupt money markets if it's frozen by sanctions or moves suddenly to avoid them, according to Credit Suisse Group strategists. We'll talk a little bit about this. They still have dollar exposure of about 50% compared to about 20%, which is what they try and claim. We'll be right back.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. I imagine this is going to be an exciting day in the markets. I'm not sure it'll live up to yesterday's action, but right now we're still in positive territory across the board, but we've had quite a little sell-off. If you look at where we were, you're talking about in the S&Ps, we were up to a high of 43.17. We've given up 27 S&P points. Doesn't look that much, but that's only because we got so much volatility going on in these charts right now. In any other world, you give up 27 S&P points over the span of about a half hour coming into the opening bell. That would be something noteworthy. Right now, it's just markets in positive territory as we kick things off. We jump over to the VIX this morning. Get the volatility index sitting just near 30 right now, 29.53 after hitting a high of 37.79 early yesterday. All right, jumping back to that article real quick. Just interesting, not sure this is going to roil markets as they're talking about here, but they are saying that it could disrupt money market if it's frozen. The Bank of Russia's dollar exposure is about 50% compared with the 20% it reports. 300 billion in the extreme can either be potentially trapped by sanctions or moved somehow from west to east, avoid being trapped. That's the type of money they're talking about that might be up for grabs if sanctions come in. Now, Russia's multi-year push, this one's worth noting, to remove dollars. I'll do it again. Russia's multi-year push to remove the dollar's hold over its economy has so far helped ease the impact of sanctions from the U.S. and its allies. Any unreported reserves are going to be much harder to track and target with sanctions, though it does raise the potential for the U.S. and others to target more accounts if they can identify where that money is. Offshore currency holdings vulnerable to sanctions. Now, what's interesting here is that the dollar reserves they hold likely shifted to swaps after it dumped treasuries. So check this out. This is a chart going from 2017 to 2022. Amazing, it's 2022. I almost couldn't get that one out. And Russia dumped their treasuries 2018. You see it go from about $100 billion to basically nothing, we'll call it. You're in the single digits. But over that time, you saw the FX reserves go from a level of 340 billion to 500 billion. So they added even more in that regard. Russia's central bank with private sector have almost $1 trillion of liquid wealth, with dollars accounting for more than most people realize. Even after the country sold all its treasuries in 2018, he estimates about $200 billion is held in foreign exchange swaps, with another $100 billion in deposits at foreign banks. $200 billion in swaps and $100 billion in deposits in foreign banks that might need some shuffling recently. Not recently, in the near immediate future. Okay, let's jump around to some of the companies with earnings. We're going to start it off with Foot Locker, trading lower this morning, back to like basically pre-pandemic levels almost, I think, right? Foot Locker trading at 31 bucks. You're down 10 bucks. You're going to open down about 25% on this equity. We got a conference call beginning at 9 in the morning. We back it up for a 3-year weekly. Again, you're going to open at 31 bucks, and that's like the area that Foot Locker was kicking around in when the market was just barely off of the COVID lows it had. You're back to 31 bucks. Now, Foot Locker, disappointing outlook as Nike cuts back on business. Not what you want to hear, man, if you're a Foot Locker fan. No single vendor is expected to represent more than 60% of total purchases this fiscal year, down from 70% in 2021 and 75% in 2020. That contributed to Foot Locker projecting profit and comp sales well below the expectations. Down 19%, now down 20%. Business with Nike is shrinking as the footwear and apparel maker accelerates a shift to direct-to-consumer sales. I mean, one of the reasons why is Nike. Now, we'll jump to Nike as that ties in. Nike shares quite the pullback here as well. Part of the reason why Nike has had some of these jumps here has been their direct-to-consumer sales. You go from $100 pre-COVID to $180 at a high. You were down to $60 at the lows. Excuse me. Taking a look at the Fibonacci retracement level, right back to the 382, folks. There are some nice companies lining up for a 382. Nothing to say that we don't go much lower, but Nike touches that level. Always nice when you come back to a level that we've been at earlier that might be an area of support. Target comes to mind as well. Target accelerates through that area. You're back to 192 right now. All right, so maybe that's the 382 not holding up, but Target was right at that area before you saw the destruction of yesterday. Now, some of these companies, right? I mean, you saw the growth companies catching bids. You did not see dividend companies catching a bid. I mean, you jump to Verizon, for instance. I think Verizon's down 1.5% yesterday. Verizon. To the likes, meanwhile, you had growth companies. How about Roku? Roku trades from 110 to 135 yesterday. You had $25 to the equity. What is that? 23% from the lows. You finish in positive territory by double-digit percentage on a company like Roku. Growth companies, huge action. Zoom from 112 to 127. Even Facebook yesterday, man. Facebook from 190 to over 205 yesterday. Right now, you can open a little bit lower. All right, so back to Foot Locker. I would not be touching Foot Locker right now, folks, because it's tough to find a role for some of these companies in the future. If Nike is going direct to consumer, more so, then yeah, I guess they can exist in malls in some capacity, but it's really tough when you have to compete with retailers like Target that might offer similar store products or something like that, right? To be a focused retailer selling somebody else's goods, and that somebody else like Nike is then selling them direct to consumer already. Well, if Nike's selling them direct to consumer at X dollars, what is Foot Locker going to be charging? Are they charging the same price, I guess, but Nike's making more money when they sell direct to consumer? It's a tough business plan, and you're seeing it play out, and you're seeing the shrinkage in terms of what they're doing with Nike, and you're back to 31 bucks, and 31 bucks on this equity, folks. I mean, what are we talking about market cap-wise? Let's see, for some context. $3 billion. I'd be careful on that one for Foot Locker. All right, what else we got going on with some equities here? We got a bunch of companies, actually, with some action this morning. Foot Locker was the first one. Cinemark, the movie theaters. Been talking about it in my newsletter, been talking about it on the show, folks. Now, Cinemark, they're out with their numbers, strong numbers. You trade higher after the acceleration yesterday. You're going to open at about $1 higher on Cinemark. That's going to be a 5 to 6% pop. That had to do with the fact unexpected quarterly profit and revenue that beat forecasts. Attendance jumped even as COVID restrictions loomed. Now, here's the tough part. Cinemark, put the weekly, all right? That might be the better play if you're looking for exposure to movie theaters. Okay, now they were already in trouble. right? I mean, these businesses were already in trouble. And I don't know Cinemark. I don't know their fundamentals at all, folks, and I do not own them. But the reason why I say that could be, I just probably wouldn't buy either, because I'm not going to be buying AMC, folks. I'm not getting into the Reddit mania of AMC looking for movies to open back up. Yes, I think that they will benefit, but I'm not doing it when the company is valued at $9 billion for AMC. Just not going to happen. Dell's out with their numbers. They are trading lower to the tune of about $5, almost a 10% pop. They are dealing with supply issues, folks. They can't get them out quick enough. It expects its order backlog to swell this quarter, with supply chain issues limiting its ability to fulfill strong order demand. How about Block? This is a good one. If you're looking exposure to some of these payment companies, folks, you missed the first run up. Well, geez, you just got quite a pullback. So Square is going to open up about $20 this morning. You're going to open at $115. I mean, you think you're missing the pop, folks? Look at where $115 is on this equity right now on Square. Not bad. We'll take a look at them when we get back, but strong numbers for Square. Upbeat forecast for the current quarter and a full year amid growing success for its Cash App. Stay tuned, folks. We'll be right back for the open.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. You got markets open and you got markets giving it up a little bit. NASDAQ 100 actually slipping into the red on the open, and that's quite a pullback. You're talking about a pullback of 1% from where we were just at 8:30 in the last hour leading up to the open. The market pulls back 1%. I don't think it minds it, though, considering it just ran up 8.3% into the highs it made at 8:30 in the morning in the last 24 hours. You get the Dow up 126 points right now. The Dow up 1,100 points off the lows of yesterday. You get the S&Ps right now up 10 points or so. Bitcoin trading up near 40,000. Quite the rebound on Bitcoin. You're up $850 right now. Crude gives back all of the gains of yesterday. You reach $100, man. Quite the trade. Pretty remarkable, right? If you think about it. If you had the quick fingers, man, you were looking for $100 oil. If you were looking for it, I hope you sold it. If I was in this trade and I was looking for $100 oil and you got to move from $92 the previous day up to that 100, yeah, you give it all back to $92 in crude. Talk about the move in gold as well, man. Gold, 1976, you almost give up $100 in gold to 1891. Folks, if you haven't tried out the gold report, if you have and you took a little bit of a break, now is a great time to come back. My dad's had some great updates out there. Yeah, and I'll leave it at that. But it is a great time to take a look potentially at that gold market. War, not always the kindest thing to gold. Up to 1976, and you wouldn't think maybe that actually, as of the 3 p.m. time yesterday in gold, you would be trading at lows that we hadn't seen all week in the gold contract. Who would have made that bet when you were trading at 1976 at 5 a.m. in the morning yesterday? And then, as we talked about, notes and bonds, man, we're getting a little bit of a reprieve and a bounce right now. You're talking about a yield of 1.976 right now. Over in Europe, you got the DAX up about 2.8%. You got the FTSE up 3%. CAC Carol up about 3% as well. All right, jumping back to what we have going on. Now, I want to jump to a couple headlines here. The first one was talking about, and you may hear it, I started off, Moscow may agree to talks, okay? That is the statement out there. That is the headline. What I would make sure that you understand, and I should have led off with it as well, is that that's only if, let me get it down. Here we go. Sorry, it was, all right, I'll get the exact quote. There's too many words on here to pull it up, but basically it was like if the Ukraine concedes or lays down their weapons. Yeah, too bad. It's not in there either. I'll find it after the next break to get that quote. It's important. Okay, let's jump down to other stocks making moves. We talked about, Block, Square. We'll check out some of these companies. So Square, you're up 24.8%. There's your 3-year weekly. Again, you look at that chart, you think you missed the run, folks. Maybe that's the turnaround on Square. Yeah, you missed 24% from yesterday, but percentages on small numbers can be deceiving. And what I will say is that in the long run, Square's probably got a running room. And Block trades under, that's their new name, right? It used to be Square. But yeah, upbeat forecast, and it's Cash App. Folks, the world is going digital, even on spending. Coinbase, let's go over and see how they're trading on the open. It was pretty muted pre-market. Yeah, you're basically flat for Coinbase on their numbers. This thing probably had a huge move in it yesterday. If you were selling some premium, you probably cashed in, man. Coinbase trading at 180 right now. You take a look at the 3-year weekly on this thing. Basically at lows. You were up to 429 when you were public. You were at 350 back in November. Now, they had some good numbers in here, but they said basically that things are going to slow down. I'll have to pull up their numbers as well because I was going over them last night. In terms of the amount of people they had, they are growing, man. And they're beating estimates in there in a big way, but the market did not like to hear that they are not going to continue growing, not even close. Maybe they might have even been slipping to the negative. So we'll pull that as well. And then Beyond Meat, yeah. Down 11.2%, folks. You just made an all-time low on this equity, and what's remarkable is I can't believe it's almost 3 years ago, 2.5 years ago. I remember when this thing went public. I remember when it went up to 240. You're trading at $40 now. You're trading it under anything it traded at when you went IPO, which had a low of 45. Okay, 43.10 is what you're trading at, and I remember because, and let's see what we're trading at right now for a market cap wise on Beyond Meat. Beyond Meat, you're talking about a market cap of $2.7 billion. Now, if you were trading at 240, what is that? It's 5-6 times that value. So At that time, you were talking about a company that was valued at $18-20 billion or something like that. And then you jump over to Tyson Foods, and I'm going to back things up, same thing, to find, excuse me, let me find, I want to find the exact date on that chart again that we're talking about. We're talking about July of 2019. Okay, July of 2019. And here's July or so of 2019. Okay, so Tyson was trading at $80. It's trading at $90 now. We jump over to the Analyze tab. Tyson's valued at $33 billion. Let's say it was valued at $29 billion, something like that. And I remember saying, hey, there's no way that Tyson should be just barely twice the company that Beyond Meat is. You think about the amount of food, you think about the process they have, the delivery network that they have in place. Sometimes it's important to make those contextual comparisons, folks, of whether that makes sense. There's nothing to prevent them from getting into the same business. Beyond Meat, back then, valued at $13-14 billion. You get that type of a run, yeah. And then you can do it a couple times in this equity. You can do it 3 times in this equity, which is just remarkable. They will be around, folks. Fake meat is going to be around. And one of the things that they do say, which is probably the best business plan, is they're not out there to replace burgers. Because if they're just marketing to people that don't want to eat meat, it's a pretty tiny section of the economy, of the population. But they want it to be an addition. And that's probably where I could see myself even, eating meat 5, 6, 7 days a week, folks, probably not the best thing. I was reading some article today even talking about statistically it's unhealthy. So maybe you just mix in some fake meat. But guess what? I wouldn't be doing it with Beyond Meat in terms of investing. Their burger, yeah, sure. I think I've had a Beyond Burger. I think it's pretty good. But boy, they're in trouble, folks. Wider than expected quarterly loss, revenue slightly short of the forecasts, weaker than expected forecast, temporary disruption of U.S. retail growth. All right, let's jump to the flip side of that in Etsy. And again, you're looking to get in some of these equities, folks, all right? You're catching bounces, and you're catching bounces. Strong forecast. It's always nice to get into these equities when they're issuing the forecast. It's not what they've done. They made $1.11 a share. The market was looking for 79 cents. Elevated demand that first developed during the pandemic is persisting, and they issued a strong forecast. And Etsy shares up 12%. But man, you look at this thing, right? Let's see where we're talking about. Pullbacks, remarkable pullbacks, folks. Yeah. That's always what's nice, folks. The 618 and the 382, I mean, there's your bounce, right at the 618, right? Yeah, you oscillate below that level. The 618 falls at, 136 or so. You make it to 109 because things were so pronounced. Folks, the bar on this is 109 and you're trading at 145. Look at this thing yesterday. Quite the move. You're up $16. But just yesterday alone, coming into earnings, you traded up $23 from where you were pre-market. All right, we get the NASDAQ selling off a little bit. Everything in context, though, holding on to most of the gains from yesterday. We jumped to Microsoft, down about 0.75%. Amazon had a heck of a run yesterday, more than $200. You're a little bit negative today. We jumped to Apple shares right now, negative as well. Stay tuned, folks. We'll be coming right back after the break.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. I got a chart of Carvana up here. Carvana out with their numbers, decent numbers. They're also making an acquisition. They're up 3.3%, but man, you talk about some volatility in the open. I'm going to put it on a 1-minute chart just to see the run up to 143.27, and just like that, folks, you give up 9% on this equity basically. From 143, you're pushing below 130 right now. You give up about $13. One of the headlines, Carvana is buying car auction services vehicle auction business in the U.S. for $2.2 billion. Online used car seller moves to boost its physical presence. Looks like even being online, you need some physical presence. CAR, K-A-R, is their symbol. Good day to be a holder of their shares, up 47%. You push 25. I wonder what $2.2 billion means for a share price on this. You jump over to the Analyze tab, and you're talking about what's going on here. This company is valued at $2.4 billion right now. How are they buying it for $2.2 billion? Maybe that's why it's trading lower. Maybe they think it's going to be a bidding war, I guess. Yeah, seems like maybe the market's not thinking they're going to get it that cheaply. But Carvana, here's one of the other stocks I was talking about, folks. I mean, they've changed the way we do business in terms of buying cars. They haven't changed the way, but I love that business plan. The idea for many people going to buy a car is a very intimidating experience, and it should be, because you are entering a high-stakes negotiation for potentially tens of thousands of dollars in terms of who is the best negotiator. That's tough, because guess what? The people on the other side of the table usually have a much better idea of supply and demand in that market than you, the bidder on that market, right? So it's a little bit intimidating, as it should be, because you're entering a high-stakes negotiation with usually somebody who does this for a living 40 to 60 hours a week. So they're going to be more informed of the real, true value of that car and probably the limits. Carvana, they take it out. I don't want to negotiate. Tell me the number that you're going to sell it to anybody that I know you're going to make some type of margin on that vehicle, and I know it's a fair number. Don't tell me the sticker price, and I have to hope that I'm not going to get squeezed and be the novice, right, that lets the dealership make 15 grand on my vehicle, where the guy who comes in and plays hardball, or the girl, comes in and gets it, and maybe the car company makes 3 or 5 grand. I'm ballparking, but you get the point. So this is an attractive business model. If you think so, what's interesting was, look at the last time I had this Fibonacci number on there was prior to the push to 376. I had it on there from the highs here, which correlate to the 618. So let's edit this one. We'll activate that drawing. Look at that. I did it a year ago, folks. I put that on the chart going back to when it was there, March 1st, a year later. Yeah, you are well through the 618 now. Maybe you get lower. You could start to dabble in that. This puts the company valued at about $11 billion, something like that, I think. $10.7 billion. You're going to face some volatility, but man, if you were looking to get in it, right? It's remarkable how well the market has held up. When you think about the number of decent equities, they might not have superb earnings right now, but they have revenue and they have growth and they probably have a future, have just been decimated. Carvana, I mean, Zoom comes to mind in dramatic fashion from 588 to 122. This is a profitable company, folks. Okay, Zoom. They make money. They make lots of it. Salesforce comes to mind. Down a little bit today, but man, you pull back the full 618 of the run you had from 115 to 311. I've talked about it many times. Roku as well, from 490 twice last year to 132 on Roku shares. And there's too many to name almost. All right, let's jump around to some of the other stocks. I think that was actually it. Yeah, Etsy, Beyond Meat, Foot Locker. They're talking about Foot Locker. They're talking about it. They're calling it Tower Records. The Tower Records have passed. It could be, folks. It's remarkable. I remember Tower Records. I remember riding to Tower Records in Boston. I don't remember the street because I was so young. On the back of my dad's motorcycle, as a young kid, trying to find a CD. I think it was a CD. Could have been a tape, but I'm pretty sure it was a CD that I wanted as a kid. Riding into that Tower Records. You're talking about, a multi-floor record store. Just doesn't exist anymore. Does Newbury Comics still exist? Maybe anybody knows that. Newbury Comics, that was a great spot as well. Maybe they kind of transitioned to other items. But Newbury Comics, that was a good one too. I remember we used to go to Braintree, the Bertucci's Pizza by the Braintree South Shore Plaza, and would stop off at Newbury Comics right next door while we waited in line. If anybody's used to that solid Bertucci's Pizza. Oh, that brick oven pizza. Okay, all right, back to the markets. Here we go. Let's jump around to some of the FANG stocks. See how they're trading. Amazon, man, you're looking for an entry in Amazon. You're not going to get many chances under 2,800 again, potentially, folks. 2,700 and change it was at yesterday, just like that. We're back above 3,000 on Amazon. I mean, you look at the pullback. You were sitting at a 382 of Amazon up to 3,700. Microsoft, you talk about pullbacks, almost makes it to the 382 in the same way. Microsoft traded to 271 yesterday. I have the 382 at 267. Lots of pullbacks in this market across the board. Okay, let's jump to what other headlines I got pulled up here. Yeah, this is going to be an interesting one to start to play out in your mind. Taiwan, so they're going to join the U.S.-led sanctions on Russia. Now, Taiwan, hopefully, geopolitical tensions do not rise between China and Taiwan, but that is going to be a completely different play out, folks. And I bring it up because you're seeing the importance that Taiwan plays across the world spectrum when they make so many semiconductor chips, okay? If Taiwan were to fall to China and China were to control all the semiconductor chips, all the chips, period, that are coming out of Taiwan Semiconductor, that would have a monumental impact economically, much more so than the poor humanity side of things for the people of Taiwan that don't want that. But you're seeing it play out right now. It would have an impact right now. If China controlled Taiwan, it would have an impact to what's playing out in Russia. So it's going to be a much bigger pond, for lack of a better term. Taiwan, you don't want to call a country of millions of citizens ponds. But unfortunately, that's how it plays out, because they are a much bigger player on the world stage. And unfortunately, those geopolitical tensions could see rising levels in the next 6 to 12 months. And you're already seeing the importance of Taiwan as they're being highlighted, whether they're going to join those sanctions or not, as that has to do with Russia. And of course, it's important as you have China not even coming out and condemning those actions. So what is Taiwan going to do? Obviously, that's going to play out in the same way if they were under Chinese control. All right, what else do we have up here? What do we got? Yeah, I talked about this. I will get that exact quote next time in terms of what Putin said, that he'll only meet in terms of if they lay down the weapons or We'll pull it up. Markets catching a little bit of a bid as we come into the final break. You're coming pushing session highs right now. You're at 43.07. We're as high as 43.17 in the S&Ps. You get the NASDAQ 100 back in the green. We checking out commodities. Gold sitting under 1,900 at 18.92. Check out that gold report, folks. My dad puts out a new update every Monday. He said some great action in that gold report. I think he closed out 5 or 6 trades, folks. Before some of the volatility recently, combined those trades, 100% plus. I think it was like 20% here, 15, 25% here. I think bigger numbers than that. Some great trades. You're going to see some volatility in this gold market too, which is what you want as a trader. All right, folks, stay tuned. We got the S&Ps up 24 points. We'll be coming back. Give us a call. We got time. 877-927-6648. We'll be right back for the final segment.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We get the S&P sitting right at 4,300 right now. We get the NASDAQ 100 negative 44 points right now, sitting at 13,922. And our man Basil Chapman, Newbury Comics, still around Boston. Good, I love that place. And I know Bertucci's is around. Love that place too. Jumping to that headline, folks. So the first headline that you're going to see to slide down here, Russia ready to talk with Ukraine, okay? Putin's ready to authorize talks with Ukraine on a possible neutral status for the country. Putin's willingness to take up Ukrainian President Zelensky's proposal to discuss neutrality and to send officials from the Kremlin to Minsk, the Belarusian capital. Now, what I'll slide down, and this is the one that I was looking for. Russia says surrender is condition for Ukraine talks. Good old Sergei Lavrov said Moscow won't talk to the government in Kiev until Ukraine's military surrenders. I mean, the updates are fluid, folks, but I would just put that out there for the context of what they're talking about here and what they may want and what those talks may lead to. Because if you see the visuals of what's going on, I don't imagine that's how things are going to play out so simply that they head to Minsk and all is well, especially when you have the likes of what I just put out there. All right, S&P's up 16 points right now. We got the NASDAQ negative 42. You take a look at the S&P. We put it on a longer-term time frame. There's your 3-year weekly. Not too dramatic of a pullback, folks, is what I'm talking about here. You think the pain may be done. We didn't even hit a 382 with the entire move we had from 2174. But guess what? The Qs, they basically got there within 100 points. You trade down to 13,025. The 382 of the entire move from 66.28 to 10,100 points higher was 12,912, and you traded within about 100 points of that, and then boom, just like that, we bounced 1,000 points. 13,908. All right, folks, stay tuned. We got our man Basil Chapman. He's coming up live next with the Tiger Technicians Hour. Larry Pesavento, he's live at 11 with Trade What You See. Fast Market, Kevin Hincks, Tom White, the team at noon. We have our man Steve Rhodes. He just did his program. That's going to be coming up at 1 p.m. time at 2 o'clock. Brian, my dad wraps it up live from 3 till 4. It's a wild one in the markets, folks. Have some quick fingers in this market as we're going to have some quick moves probably in both directions today. Right now, we're getting a little negative action. NASDAQ 100 negative by 66. Stay tuned, folks. Basil's up next. Have a great Friday.